If you're sitting on a pile of cash, or any cash for that matter, should you invest in the almighty stock market, or should you buy real estate?
Real estate. I mean, look, first of all, there's not a lot of people, not everyone's sitting on a pile of cash like you, Travis, right? So
Yeah, we're not all rich and white, Trav. Okay, so don't just...
Oh, God.
But look, whether you're sitting on a pile of cash or you're saving for retirement, I think it's a promise and a lie that's been sold to the American people that the stock market is going to make you wealthy, that saving for retirement someday is going to make you wealthy. Real estate has benefits that no other asset has. Real estate has the benefit of appreciation, has the benefit of cash flow. It has tax benefits, right? And I know very few people that have created wealth through the stock market. And I know very few people that have increased their wealth. I shouldn't say they haven't increased their wealth through the stock market, but have increased their wealth and been able to benefit from the cash flow from the stock market. But I know a lot of people that have benefited and grown their wealth and their cash flow through real estate.
So do you think there's times in history or over a year where it would be more beneficial to go, like, is there a moment when the stock market is at a certain level or whatever, where you're like, look, I've got $100,000, it's better placed in the stock market? Or are you saying, do you think it's like, no, always go for real estate? Because I mean, I think I can make an argument that there's different opportunities in equities and or real estate.
Well, I mean, if you talk about the last few years, some of the people listening to this and be like, dude, I've made a shitload of money in the stock market. Every time I look at my Robinhood account, or the fact that I look at the stock market because I'm out of the stock market, actually. It's just like, bad news, it's up. Good news, it's up. It's up. It's up. It's up. And so in hindsight, you can look at it and say, man, I could have, and a lot of people listening to this could say, look, I'm invested in multifamily. Multifamily's taken a beating in the last few years. They could say, I've actually taken a beating in real estate, and I missed out on some significant gains in the stock market. So people could argue that because it's been frothy for sure.
But most people don't actualize those gains. That's the whole thing. I mean, you could look at a chart. You could look at a stock market chart. I know many people that go, hey, look, I just put, everything into the stock market, and year over year, and it goes up. But I say, hey, what's your cash flow? What kind of cash flow?
Cash what?
Yeah. How many money you're putting in your pocket every month? So they're looking at the stock market as a someday payday, not today. Right. So I think it really comes down to, like, what's your investment philosophy? What are you what do you want your money to do for you? And for a lot of people, the stock market is this someday plan that they never actualize, and they're not making any money. Maybe they're building some wealth on paper, but they're not actually putting money in their pocket every month to survive. And that's what we all wanted, right? Like, we wanted cash flow so that we had the freedom to go live our life on our terms, not to have $1 million someday when you're too old to enjoy it. Like, we want to build wealth today so we can have a life that we want.
Hey guys, if you like what you're hearing on the 0 to 100 podcast, come join the 0 to 100 Elite Mastermind. We have a very simple goal for you. That's replace your day job, make $120,000 a year plus in cash flow, real estate, and become a millionaire. That's it. If you like that, if that's you, click the link below, and we'll see you on the 0 to 100 Elite Mastermind.
For me, it's also about, like, deals. Like, anytime I invest my money, I want to get a good deal. And, like, when you look at the stock market today, your average PE ratio across, I think it's like S&P is around 25 PE, meaning price to earnings. I mean, in other words, really, really low cap rate, if I'm sort of bringing this over to the real estate side. So the stock market is pretty inflated. I think a lot of the AI stocks feed into that. There's been a big run up of the NVIDIAs, Teslas, CoreWeave. Like, there's a lot of stocks that are pretty inflated and creating a frothy stock market. So for me, like, I want a good deal. So, like, I think it's rare for people to understand how to get good deals in the stock market, how to actually analyze a company and say, hey, this company is healthy. It's got cash on the books. It's great. It's at a low PE ratio. In other words, a high cap rate. I think it's rare for people to understand that, including myself. Like, I've tried to over the years, try to understand that. I don't think I'm good at it. I think real estate's a lot more simple to understand a good deal. For me to analyze a mobile home park, it's way more simple than to analyze Microsoft and understand the whole leadership and where they're trending and their product suite and all that stuff. So the simplicity behind real estate, I think, is a lot greater. Now, I would argue if I was sitting here in $100,000 and cap rates were really, really low and it was tough to find a real estate deal, not impossible. But you look at the stock market, we've seen a massive dip, which we've seen in the last 3, 4, 5 years. We'll see these moments where the stock market craters and stocks go to like a 10 PE on average. Dude, I'm all stocks. I'd be like 100% because everything's on sale.
How's that worked out for you though? Because I know you've actually played in the stock market a little bit, and you're not a very smart guy.
So I think that if you can recognize when stocks are on sale, you can get amazing deals. And if you look back at the recent crashes, when everybody's fleeing the stock market, and they're like, oh, this is a different moment in history, you can get really good deals.
I think you're wrong. I think we're totally missing the target on this, on this question. For one, we're not factoring in leverage at all. So, Travis's opening is like, if you're sitting on cash, a lot of people are not sitting on cash. And one of the advantages of real estate, like when I got my start, I had no money. And real estate is the most leverageable asset on the planet. So for one, most Americans are not sitting on a pile of money. And I've had people say, like I had a close friend say, well, what if you just would have dollar cost average and just put money into the stock market? And, what would have happened over the last 20 years that you've been
living in your attic that whole time?
Would have been living in the attic for $100 a month. Exactly. So I'm going, I was not in that position. I didn't have hundreds of thousands of dollars a year that I go put in the stock market. The advantage of real estate is whether you have money and you want to invest it into your own deal, someone else's deal, or you have no money, but you gain the knowledge, you still have an opportunity to get into real estate. If people are putting $5 a month into the stock, not life-changing money, but with no money, but the right network and the right knowledge, you can actually go build millions of dollars of wealth, create millions of dollars, hundreds of thousands of dollars of income without starting with any money. And that's the conversation that we're not having, is how leverageable real estate is. It's the most leverageable asset on the planet, and you just don't get that in the stock market.
So I do agree with you. The only reason I have money to invest in the stock market is because I made it in real estate. So I do agree with you. But Travis did open it up saying if you've got cash lying around. So I'm picturing somebody who's got $30,000, $40,000, $50,000 laying around. Now, I think that 99% of the time, real estate's going to be the better asset. But I could see there are short-term moments. When you look at the last couple crashes, they're V's. The United States government, whoever's in office at the time, does not want a stock market that's suffering. They will do whatever the hell they can to get the stock market to recover, and they've done that multiple times. You could have doubled or tripled your money during those moments. Now, do you have the wherewithal to do that? Do you have the cash to do that? Now, I'm talking about within 3, 4, 5 months.
Well, you're also talking about timing the market. Even let's say we have this current run continues, which I agree. I think the stock market's way too frothy. I personally feel it's overpriced. But let's say it does continue on this run. People are thinking, okay, I could double my money, 5, 7 years, if I just go into an index fund, if it continues to go up and to the right like it's been doing. But Mitch, you and I, we see deals every week where we're looking at, say, a mobile home park, and the income's not optimized, the expenses isn't optimized. It's not rocket science. Once you learn the fundamentals, you fix that. And you're like, we have 2 properties that we have in contract right now. One will be up $1 million in value in 12 to 18 months. The other will be up $2 million in 12 to 18 months. You pair that with leverage, right? Like Gabe is saying, everybody wins. And so I was actually thinking about this today. I was about ready to say on the way to work, but I don't drive to work. So I was just thinking about this today, and I was like, sometimes I do, every time I check the stock market every day, and I'm like, damn it, I feel shitty because I got out of the stock market and I missed this last run. But I'm like, but I didn't, because I'm still finding deals where I can bring investor capital in, I can bring bank debt in. We'll beat the shit out of the stock market returns every single day while we're making cash flow, while it's tax efficient income. So those deals are out there because the stock market is, for the most part, efficient, right? The price is set by supply and demand fundamentals all the time. These two properties we found off market, direct to a mom and pop seller who wants to get out of. He's 75, 80 years old. Rents are under market. We know these are great locations, great assets, and we know the end game before we start. We know that we can get these rents up. We know we can get these expenses down. Well, the stock market, it's like buying a single family house. You're kind of hoping that the run continues, and you don't really have the insider knowledge that these executives do. Or these
no, you don't. But also, like, I mean, look, in a situation where you got $100,000 and you got the stock market or real estate, I'm all in on real estate for all those reasons. Totally understand that. For me, I've got 5% of my net worth that I go and play in the stock market with. 5%, maybe. So I think you can play both. I think you can do both. I think you can look for deals in both. I'm a 95-5 or 90-10, maybe. But again, like, you cannot get the same leverage. People love to compare the stock market to real estate, and they go, we've got a buddy who does this, and he goes, well, over the last 10 years, the stock market's done 8 or 9% and the real estate's done 7%. I'm like, until you attach leverage to it, until you attach zero down deals, until you attach whatever, you're talking about hundreds of percent on your money versus 7 or 8% average in the stock market. There's absolutely no comparison, and tax and distributions, cash flow, all that. So
that's my entire point. So to Travis's point of, like, have 100, let's say you have 100, let's say you have $20,000, $50,000, $100,000, $500,000. It doesn't matter what the number is, and you put that in the stock market, you may make a percentage on paper every year, but you could take $40,000 and $100,000 and buy millions of dollars.
And change your entire life,
or create millions of dollars in equity out of thin air by partnering, by pairing capital,
or zero down deals, or seller contracts.
So if you have $50,000 sitting around, like, you could put $50,000 into a stock market and not make life changing money, but you can take that same $50,000, put into a real estate deal, and actually create life changing money.
Yeah, well, I mean, $50,000 into $1 million deal that goes up 5% via natural appreciation in 1 year, you got 100% return on your money.
Well, so say this: go to your bank right now. Go tell them that you want to go to Bank of America and say, I want to borrow $500,000 to go purchase $750,000 worth of Bank of America stock. I always say this: they're going to tell you to go fuck yourself. But if you say, I want to borrow $500,000 or $250,000 to buy a $750,000 apartment complex with good fundamentals, good jobs in the area, good expense, all the fundamentals of real estate, they're going to lend you all day long. And so, I mean, that always speaks volumes for me right there.
Well, even the banks don't, they like they like real estate more than their own stock. So they know that's the smart money.
Well, so why is this? Okay. Why is it that we've all been taught in school, go invest in this, go get a job, whatever's left after you pay 50% to the government, whatever you fed your kids, whatever's left, go invest in your 401k, go invest in your Roth, go invest in an index fund. We've been preached to that for years, our entire life, that's what you got to do. That's a responsible thing to do for your retirement. Why is that? It used to be pensions. People would go to work for a factory or a company, and they would get a pension, and that was their retirement. Well, why is it that got moved to the 401k? Who is lobbying Congress in those days to create 401ks? Like, it's funneling a shitload of capital in the American workers' capital into a relatively small amount of companies. Why is that? Who gets rich? Who's getting rich?
But it's like we raise money for our real estate, right? But what if I was at the level where I can lobby that people in the United States had to, or basically one of their only options was to funnel money into my company for me to go invest their dollars. I'd take fees on it, and I'd go make their money work for them, and I would get filthy rich. And I think that's what's happening. You've got money managers, whether it's a hedge fund or or mutual funds or whatever fund it is, the more they can get in there, the more they manage, the more they make. And they're at the very top, and they've created a massive funnel. And so I think it's like follow the money. I don't know who it is. I don't know how they did it, but they pulled it off. They took the pension thing is gone. Now we just funnel, everyone goes to work and they funnel money into these managers. By the way, mutual funds, Warren Buffett, I love this. He was like it was like over 10 years or something like that. He bet a bunch of mutual fund managers they couldn't beat the S&P 5, like an index fund, and none of them beat it. So mutual funds, these managed funds are all wasting money because all your money's going to fees.
Well, these people are incentivized to just manage money, not make you money, right? We have a friend that is a money manager, and he takes 1%, and his main metric is, we never love him, but his main metric isn't how can I make my clients, how can I double their money? How can I make them money? His whole metric that he measures his business on is assets under management. And that's how many dollars have I managing? And then I take 1% of that, and that's my income.
I think the piece we're not talking about is control. Real estate has a level of control that the stock market doesn't. Some executives make some crazy decision, or there is fear in the market. People are buying and selling stocks at a click of a button. Real estate's a lot slower. You can't really make an emotional decision on real estate where you press a button and the property's sold. But you do have a level of control where you can rent a property out, you can renovate it, you could rezone it, you could sell it, you could lease option it. So I think when you own real estate, not only do you have the leverage, not only do you have the cash flow benefits, some of the tax benefits that real estate allows, you also have a level of control that you don't have in the stock market. Some dumbass somewhere makes a bad decision and all of a sudden the stock, is worth half. It's hard. Like real estate moves and real estate goes up and down, but over time it definitely goes up, but it's not somebody else making that decision. So you have a lot of control of what you do with that property. And for my own life, real estate aligns with my personal goals, not just my financial goals, but my personal goals. And the stock market does not align with what I want.
Well, you have a lot of self-serving people in money management. I'm sorry, but like I've seen it when I was in the corporate world. Our vendor was publicly traded. They were a tech company. It was a tech stock. And I knew these executives and I saw the decisions they made, and they made decisions, bad decisions for the company, bad decisions for their shareholders, bad decisions for all their partners in their network, so they can take golden parachutes. They sold out it was a horrible deal they made. Everybody lost except this small group of executives that all walked away with like $10 million, $20 million, $30, $40, $50 million in golden parachutes. And the only people they were serving was themselves. And they had the control to make those decisions where everybody else was just sitting on their hands and they had no control over the situation. So don't be a dumbass. Buy some real estate.